Hi everyone, ChatTube here. Welcome to my latest edition of Bank It or Tank It. Today we're breaking down just one stock, so this is not my quick takes videos. We've been doing several of those this month and we're going to continue to do those. So please let me know what stocks are on your radar, what stocks you want me to take a look at, so that way I can feature them in these upcoming videos. Because today we're just going to cover one stock, that's Wynn Resorts. This is Las Vegas casino giant, and big thanks to Spencer for recommending this company for us to take a look at. And I think it's a very hot stock right now. Definitely should be one on your radar for various reasons that we're going to look at today, because this stock is on the move. So before we dive in, just click subscribe so you subscribe to my channel and leave me a comment. Let me know what stocks you want me to take a look at for these quick takes. We run through 4 or 5 stocks in a video, and then these Bank It or Tank It's, we do just one stock. So let me know what stocks are on your radar, what stocks you want me to take a look at. They could be on the move. I mentioned this before. They could be giant companies like Apple, Disney. It doesn't matter. If there are companies that are in your portfolio or that you want to keep an eye on, let me know so that way we can break them down using our Bank It or Tank It analysis. So today we're going to run through a few things for Wynn. We're going to look at the fundamentals, the sentiment, in the technicals, and we break all that down to figure out whether or not this is a stock that we expect to go higher over the next few months. So Bank It or Tank It, we want to figure out if we want to bank on it going higher or set the tank and head lower. So let's get started with the fundamentals. I like to take a look at a few key stats. We'll pull up the net income and total revenue here. This stock's funny because it has it all on one scale. Normally, the net income, total revenues are so opposite that there's 2 scales here to show where they're at, but this one was able to use one scale. And a key reason for that is because their net income is roughly about 13% of their revenue, so about 10%. And you can see it here in the earlier years, 2017, 2018, that's true. 2019, not so much. And in 2020, we're sitting on negative net income. That's why it's down below the zero line. 2021, negative. And then we have 2 columns for 2021. I just want to highlight that. We had the expectations for the end of the year, but the actual results that they posted on June 30th. So those are going to be kind of wedged into one, because that's actually going to represent the year 2021. Then as we get into 2022, they're already looking for this to bounce back. So investors are not looking for this company to be held down long due to the coronavirus, the COVID drop. You see the revenue just gets slaughtered here from what, almost $7 billion for the year, so down to less than $2.5 billion. Massive drop there in revenues, over half a cut. And we're going to start to see that bounce back here in 2021, but they don't expect it to get back to normal until 2023. So we're still looking at years of recovery here in terms of their revenue. And this is basically in terms of people heading back out to Vegas, heading back out to the casinos, to the resorts, spending money at the casinos. They don't expect that to get back to normal until 2023. So we still have several years here of uncertainty that could really continue to grow and build for this company. Now let's take a look at some of their quick comps to see how these companies are doing and how they stack up. And you can see a lot of familiar names here. Las Vegas Sands, another casino giant over in Vegas, MGM. And we have Boyd Gaming, and Marriott International, so some hotels, Penn National, Caesars, Hilton. These are just resorts and casino giants listed around the world. Market cap wise though, Wynn Resorts, about 10 billion market cap. That's a pretty small company here compared to the 17 billion average of these other competitors. You can see Marriott, 43 billion. Clearly they're not as directly tied to the casinos as Wynn, which their resorts, their operations are all tied to casinos, where the Marriott's got hotels all over the place. But Las Vegas Sands, that's a more direct competitor. Still 30 billion there on their market cap compared to just 10 for Wynn Resorts. So it tells you that this company is not massive by any means. I know Wynn Resorts is a giant in terms of the Las Vegas industry, but globally and on a grand scale, they've got a lot of room for growth. And that's something that we can talk about today, because they have a lot of good things going for them, including the legalization of sports betting that's taking place in many states. And then we're seeing that they have their own WynnBET that they're starting to branch out into multiple states too. That'll help them bring in more revenues as this continues to grow. So that's going to be a key factor in growth going forward, and especially help kind of stable out things. But they're waiting for Macau to come back, Las Vegas to come back. So they got these areas that I just saw a big drop in casino gaming. So Wynn Resorts, 10 billion market cap, got plenty of room for growth there. Revenue growth over the last 3 years, the compound average annual growth rate, minus 24.6%. So they're losing money, but you see that that's almost across the board here, that these companies are starting to struggle and lose money. The average is 2.7% decline. But Las Vegas Sands, again, a key competitor here. Even MGM, down 30%, down 16%. That's their average loss that they've been seeing over the last 3 years. And a key part of that is just a massive drop that they saw in 2020. And that plays into their net income too. They have negative net income right now. We saw it on the chart before. So that makes their net income growth rate here not show up over the last 3 years. So now let's take a look at the sentiment for these companies and how Wynn fits in and how investors are really feeling about it. So the price to earnings ratio, the first thing we're going to look at. Wynn Resorts, because of their net income, it's not going to really impact today. But I really wanted to point out here that the mean 47.6 times. So these companies have lost money. Their prices are starting to come back up. And that's really what that's reflecting here, is that yes, all these companies are low on net income from where they used to be. Boyd Gaming still just trading at 19.7 times earnings. So that's probably a more realistic measure compared to something like Marriott trading at 126 times earnings. So this is just showing that as they got a little bit of profitability there on the net earnings, investors are really keeping the prices elevated, and that'll all start to kind of fall back in line here over the next year or so. And then I like to look at the short interest here just as a key idea of how many investors are really looking to short this stock. Wynn Resorts pretty high, 6.2%. The average is 3.6%, so more than double of some of their peers here. But it's not considered exactly high short interest yet. Maybe they're just a play on worried about the reopening plays here and then the risk that it could continue to fall. And when we take a look at the price chart, though, you'll see why a lot of people have been shorting this stock and why this could be high now. So I'm not too alarmed that it's high now. I think it's going to be dropping here over the next few weeks, even as we take a look at the stock. So the average broker recommendation, this is basically the analyst recommendation, how they look at the stock. Wynn Resorts a 2 and this is on a scale from 1 to 5, so that's going to be an outperform rating here. Pretty solid buy, and you can see that the whole industry is in a pretty solid buy. But it's in a pretty solid buy. I've been losing money, going through the pandemic, going through everything else. Now the question is, where do they go from here? What happens next? And what do we think is going to happen with Wynn Resorts, whether or not it's going to be a stock on my bank it list or 10-gate list? So for that, we're going to turn to my favorite part, and that's the price chart. And we're going to start with this big picture here on the price chart. And one of the reasons is because, we do have these big trend lines. We have this yellow support across the bottom hitting on these major troughs that we saw where the stock dropped. And this one, yes, it broke below it. That was a pandemic. But I still think it's relevant to kind of track this, just kind of based on the way it's going along, these key drops for the stock. But now when we look at the resistance here on across the top, it's got a lot more room up here to the upside from where the stock is. This is the stock. The blue line is the stock. It dropped way down here. So we're going to get into some of these shorter trends in just a second. But again, long-term chart, just to really show you that, look, where it's trading at today, around $90 a share, that can go back all the way to 2006. So we're talking about 15 years here of data, over a decade for the stock for this Wynn Resorts. And look, I went to Wynn back in like 2010. I think it was the first place that I've been to in Las Vegas with my wife and kids. And this place was amazing. Staying at Wynn Resorts was the nicest hotel at the time that I had ever been to. And being in Vegas and just everything about it was very high-end, very great resort. And I mean, I would definitely go back there. I haven't been. I've tried other places in Vegas since then. But it was definitely a highly recommended resort if you ever go there. I mean, it was flawless, basically. But from that point, look, this 2010 up till today, the stock hasn't done anything. Yes, it's ran higher, then it's crashed lower. Then it ran higher and crashed lower. It's had all sorts of issues that they've been having to sort out. And those are not going away, folks. So this company is going to continue to have headwinds that it has to battle, continuing to try to find growth here from the casinos. But again, online sportsbook, that could help start to open some things up that people don't have to be in their doors for them to make money. But we'll see how that plays out. When we take a look at where the stock is now in the shorter term trends, you can see that the major support here in green, this is what we want to watch. And it's not a super tight trend line. It's not as tight as most of the ones that I would like to follow, but I do think that this area is going to look for the turnaround here for the stock. So we're looking for this to hold as like a key support and then climb higher. And I highlighted this just with some light trend lines. This was a descending triangle pattern here on the breakout, but I just wanted to point out that we're still looking at a pretty broad chart here. And a lot of time has taken place, and it's going through these patterns. So we went through this descending triangle pattern, and then it fell out of that. And this is basically what we've seen play out, and then continue to slide lower. So you can see why the short interest would be high. This stock has plunged over the past few months. When we zoom in, you can see that our relative rotation graph here highlights the candles and where we were at on the chart. Red is lagging, blue is improving. So the next chart that we would look for this to go to is leading. So we could maybe look for a little bit of a bounce here, but then it goes right back into weakening and lagging. So weakening is yellow. So here we started to go through all the patterns. We were in leading, then we started to weaken, got to pull back, lagging, kind of got choppy, it didn't do anything. Improving, lagging, improving, leading, weakening, lagging, and then you see in lagging just tanked, completely fell over there in that lagging quadrant. So now the question is, where does it go from here? We expect a leading quadrant, but where's it going to go over the next few months? Is this going to be on my bank it list or my tank it list? So I'm one that I say I don't like to fight the trends. I don't, you see this one heading lower. So I would a lot of times put that something like that on my tank it list. Today, we're not going to do that. We're going to put Wynn Resorts on our bank it list. And a big reason for that is because it hasn't gone nowhere over a decade. This is a stock that can see V bottoms pretty much every other month. Look at the volatility in this thing. Yes, it has some bigger slides, bigger drops, but then you also see these short terms, ups and downs that go through just the chop here for a stock like this. So after the big drop that we've seen, knowing that we kind of are in somewhat of a support area, this one's going to be on my bank it list over the next few months. If you want a price target, look, I'm looking for it to get back up into this range, around $120 a share. So that's about a 30% rally from where we're at today over the next 6 months to put Wynn Resorts on your bank it list. So that's all for my video today. Again, I hope you enjoyed it. Quick recap. Wynn Resorts, very high-end casino, getting into online sports gambling, so a lot of things can help kind of go right here. But once the crowd starts to come back to Vegas, Macau, then Wynn Resorts is going to be back on the map, and we're going to see those revenues continue to climb. So today we're going to put it on our bank it list. Watch for it to climb higher over the next few months. Keep this key area of support in mind that we highlighted. It's not a solid trend line that you want to watch as soon as it breaks to get out, but that area in general is going to be the area to watch here for the support to hold and for the stock to bounce up about 30% from the current prices. So again, don't forget to subscribe. If you like my video, click the thumbs up to let me know. And until next time, I'm Chad Shoup.